We're live on a Wednesday night. I've been running around. I forgot to put my Burt's Bees Use Some Gum Focus. Burt's Bees brought to you by Clorox. Not many people know that Burt's Bees is indeed owned by Clorox as well as Kingsford Charcoal and Hidden Valley Ranch. So what's up? Yeah, we got a little bit of news. Well, we all know it's coming once a quarter, right? We know what Berkshire Hathaway and all the other hedge funds are going to do. They have to disclose their holdings, and this time around was no different. So, what's up for those of you? Yeah, I know it was a bit of a it was a bit of an unplanned thing. I was going to put this video together, and I thought, you know what? I'm going to go live because I want to hear what you have to say. And those of you watching the replay, don't be shy. Go ahead and say what you want to say, why you think they sold some of these positions. And as you see at the very top, it didn't come out how I wanted it to. I assure you, I did the work. So take it for what it's worth right here. I did the work. I know, it's crazy, right? I did the work here and figured out what Berkshire's patty was before, what it is now, what they lost, what they added. So that's kind of crazy that their patty is, it sounds like a lot. So of all the stocks, okay, I just lost my accent. I don't know what's going on. I'm all out of sorts because it's a Wednesday night. We can talk about stocks or we can talk about stocks too. Stocks feels more natural to me. So yeah, Berkshire, they lost $141,663,074.30 in projected annual dividend income. That's what patty means. So they lost that in patty. And you'd think like 141.6 million, $0.7 million they lost in patty. Like, oh my God, that's crazy. But yeah, it turns out it's really just about 3%. Like they've got stupid amounts of dividend income still coming in. So yeah, before we all get worked up and be like, what are they doing? They lost 3% of their patty. So it's crazy. That just goes to show how ginormous, if I can quote the wonderful Will Ferrell from the movie Elf, that their dividend income, that the whole business is. It's pushing $1 trillion, I think, 750 billion market cap, I believe. So it's good to see all you guys here, and we got all the Kevins and the Eddies. Eddie and Kevin Mendoza. I'm assuming you guys are related, and if you are, cool. If you're not, that's cool too. I don't care. Pretend you're related if you're not. Pretend you're not related even if you are. That could be more fun. So, all right, we got a few of you in here. Let's go real quick. So if you'll notice in the description below, I put a link to go right to where I'm going to show you at 13f.info. And if you don't know how to get there, you can just follow along and, oh, you guys aren't related. Well, then, prepare you. Yeah. Dude, to tell me, 4872 from, oh, what's got two thumbs and also got paid by, oh, this guy. Okay, so I'm going to chat with you guys when I get back from showing you how to do this. You can see for yourself and study what they've sold, what they lost, what they've done, what they're doing, what they're not doing by going here, my dividend investing viewer friends. And I am Russ, by the way, of the Dapper Dividends podcast. I want to go home. I want to show you from the beginning. So if you go to 13f.info, you will see this page. And right here, you can search all kinds. You want to see what Michael Burry's doing. You want to see, what Bill Ackman at Pershing Square is doing. Go ahead, look at it. But obviously, the one that everybody knows and loves is Berkshire. So right here, this is their publicly disclosed info. And I know you guys have seen this before. So if you click on the current quarter, which is the one they just released, and then you come down here to compare quarter 3, 2023 to, we like to look at the last one just to see what they're doing month over month, or if you wanted to, go look year over year. But for all intents and purposes in our video, we're going to do this. So this is a really nice site, completely free. Free to you, free to me. What do we say? If it's free, it's for me, right? So yeah, but sometimes you get what you pay for when it's free, right? What do they say? Buy cheap, buy twice. But if you don't buy it at all, hey, that could be something. But what we're going to do is look at the change right here, not the value, but we want to see the share amount change. So we'll start with what they added first. And I'd love to know. I did some quick Googling and I couldn't figure it out, but they're just different share classes. They added LSXMK, MA, LLYVK, and LLYVA. They're different voting share classes. I'm guessing just like Berkshire has the A and the B of Liberty Media Corp. Liberty Sirius Media Corp, I think. They also added to SiriusXM Holdings, which is the only new dividend-paying stock that they have. I know, right? SiriusXM pays a dividend? You jest. Surely I don't. But SiriusXM, and then they added ticker BATRK. This is one I'm not familiar with. They don't pay a dividend, but it is the Atlanta Braves. I think it was a spinoff from, I did a very quick search. It was a spinoff, and if you wanted to say you own part of the Atlanta Braves, I don't really know how they did this year, but there you go. You can run around telling all your friends at the bar when you've been drinking too much and say you own the Atlanta Braves if you want to do that. Everything else was unchanged. If you hit change percent again, bing, look at the red. It'll start with the biggest sell-off and then go down from there. So we'll just run right through. And if you, interestingly, so they sold out of Liberty Media Corp. Remember LSX, MK, and MA? Apparently they sold out of the position, and then maybe a couple months later, they bought back in. Okay, I don't know what's going on with that. We could talk about that. That could be Buffett has lieutenants. He doesn't do everything. He has Todd Combs and Ted Wexler, who are his lieutenants, who do a lot of moves too. So either way, those could be his. Activision Blizzard, I counted it. The last thing I could find. Did you get a dividend from them? Let us know in the comments below or onto the side, wherever they are on the screen. I don't know. I'm not with you, but I am with you, looking up at you from this monitor. Whatever you're looking at. Either way, Activision, they paid a 99-cent dividend. So I still counted it because it was technically dividend income, even though they were acquired for cash by Microsoft. It still counts. They sold General Motors 22 million shares. Celanese, I actually ended up selling out of Celanese fully today, as well as I did another position. But we can talk about that too. Make it remind me if I forget. They sold out of Johnson & Johnson. They only had, or Johnson & Johnson. They only had 327,100 shares of J&J. They sold that. Procter & Gamble selling some of the blue chips. Yeah, they weren't massive positions, but regardless, they still sold it. Exited Mondelez and United Parcel Service. So they were massively a net seller of stocks. And then we'll just wrap it up here. They sold 67% of their stake in Globe Life, which is like a health insurance company, I believe. Markel, which is like a baby Berkshire. Tom Gaynor, their CEO, really big fan of Buffett, really good guy from the things I've heard and read. Sold out 66% of that position. HP, 15% they reduced. Chevron, they sold off a 10% stake, which, dear dividend investing listener, that Chevron stake in Patty, they lost, there it is, they lost $665.9 million in projected annual dividend income by selling Chevron. Aon, they sold 5%, and then they reduced Amazon 5%. And then, peruse at your own time. Maybe you got insomnia, you can't sleep, you want to see what Warren, what they still have and what they hold and what you might hold too, like Kroger. There you go. They got 50 million shares of Kroger. They neither added nor detracted from those. And then if you go over to the right, it will also show you the value. If you're curious about the value and the change percent, which let's have a little bit of a look-see. The biggest loser for them, because they sold those. Well, I don't know. That's not going to work right. But how about the biggest gainer? 20% was Charter Communications after that dispute with Disney. So there you go. That's a fun little thing you can look at. Have fun. Knock yourself out. 13f.info. And that's pretty much everything that they did. You don't need to see that. Stop sharing it. So, yeah, I'd love to know, what do you guys think? Why do you think that they sold Johnson & Johnson? Why do you think they sold Procter & Gamble? What are your theories? And I read a few articles, and nobody really had anything of substance. Why? Well, because nobody's inside the mind of Warren. I mean, we can all play the guessing game, but I will ask you this. Do you think when you see something like this, when you see a Warren Buffett selling out of Berkshire, no, when you see Warren Buffett selling out of Procter & Gamble, belay my last, which is another Navy term we used to say, meaning, hey, forget what I just said. That was a goof up. But they, yeah, Chet, I love it, man. Yeah, all they lost in, where did we go here? I get my reading glasses out. Yeah, all they lost was $665.9 million in dividends by selling that. But hey, they got a reason. They're going into cash for something. So I don't know if Warren thinks that the market's still overvalued and we got a drop coming, but hey, you know what? You guys want to know what I sold? What I sold, okay. Well, I probably could have been better prepared. I was going to say this, it'll be in the newsletter, of course, but let's say I miss anything. Yeah, so again, just share with us, share with everybody. I want to know your thoughts on if you would have bought, would you have picked up anything that Buffett put down? Because I sure did. Well, not right now, but what he put down a few months ago. Because remember, the 13 Fs, it's stale information. It's not up to date. And they do that so they don't move the markets too much by people saying like, oh my God, Berkshire sold Procter & Gamble yesterday. Everybody sell. No, you have to take it with a grain of salt and think, okay, they might have had a better opportunity. They're playing a different game than you are, perhaps. So do I think J&J is a bad company? No, because I bought more today. So what I sold the remaining 10 shares of Celanese, and I sold Target. Sold the remaining shares of Target. I had 17 shares left. If you guys remember, I've been peeling off shares. So at 130.50, I sold 7 shares. I had 10 left. And I looked at the chart. I guess we could pull up the chart. Does anybody want to see the chart on stockcharts.com, like what I looked at? Why I think that we're going to see some profit taking and we're going to see some pullback on Target. Let me know if you want to see that. I'll show it to you. I don't mind. I got some time, hanging out with you. And then I bought some more shares of Johnson & Johnson. So I'm sitting in the bridge portfolio, which we have a link to on dapperdividends.com. I'm sitting in about almost $3,000 of cash right now. So I'm probably going to put most of that into J&J. I'd like to get them to 100 shares. Currently at 45 shares of Johnson & Johnson. And that's one of the ones I really want out 100. And they're not in SCHD. So that's one of the things why. So let's get caught up on you. Yeah, good to see you, Chet. I still got your email. I think you emailed me, and I got to get back to you. I got to respond to you. Yeah, Kevin, dude, I don't know. It could be Warren on the bottom. Could be he's, like he said in some of the annual meetings, like when him and Charlie go senile, they'll just pretend like they know each other. Yeah. So, funny thing, Caleb, when you say that's 50% of Berkshire, it's actually 50% of their marketable securities. So everything we looked at on 13f.info, because remember, like we talked about last time in the last live stream, remember they got Burlington Northern, they got Dairy Queen, they've got Allegheny, they have all those big Geico, all the businesses they own outright. So their marketable securities portfolio, about 50% of it is Apple. So yeah, you're right. Just a little caveat to add there. Just doesn't mean to go run out and make Apple 50% of your portfolio because Warren has it on theirs. But interestingly, though, one or two businesses, we don't know, but they asked for confidentiality from the SEC to not include it in this round of 13F. So that's an interesting thing. Also, they don't have to disclose their foreign holdings, which is why we didn't see like a BYD in there. There's a Buffett on CNN. There was a Buffett tracker that showed their foreign holdings. Let me see if I can pull that up for you while talking and multitasking. You know, Charlie Munger's not a big fan of the multitasking. He says is it CNBC? All right, hold on. I got to have radio silence in my head so I can type. And one Buffett tracker. I know, riveting if you're just watching me type on the screen. Okay, here we go. I'll bring you along, everybody. Come with me now to the land wherever we are. I don't know. Let me hide your comment there, Caleb, so we don't bother too much of the screen. Just share the entire screen. I was going to say something else to you guys. I forgot what it was. Too many things rolling around the old noggin. Okay, here we go. The portfolio tracker on CNBC. Now I'm going to scroll down, and it should show you a interactive chart. Granted, remember, hey, we got the Apple MacBook M3 Pro on order. $11.28. It'll be in the Apple Store in Oak Brook, Illinois. So please don't break in and take it. And you'll see that I'm having memory issues. It's too much, and it's going to be right here. Come on, you can do it. All right, well, I guess we'll give that a minute, and we'll have to come back. And for those of you that are first-time viewers, this is why I bought a new laptop. I like to be mobile, to have that optionality. But either way, I'm going to put the link here in the. Let me try this. I want to know if it's just me. Sorry for the stream section. I wanted to put this in the notes. I know, fun. You're watching. It's like behind the scenes, right? I put it in the link for where this is at, and it's not coming up, but it'll be right there. It's an interactive chart. Budweiser water. Don't know what that is. Obviously not real. What is that? That's got to be a joke, right? Hold on. Oh. I thought it was a joke. Come on. I thought that was a joke, meaning like, oh, they just changed the color of the can, right? All right. Well, this made a liar of me, but I'm telling you, right where that area is. Somebody else pull it up. Tell me if it worked. Is it just my computer? I gotta know. Let's see. Did anyone want anything about the chart? No. Do you care? Let's see. I'm gonna make sure I didn't. No. Russ, would J&J be your second 100 shares company? No. Good question. It would not. Good, Clifford. So word. You can see the. I'm gonna come back. It's this memory. I'm telling you, it's the biggest pain in the balls. But yeah. Oh well. You guys can check it out. It'll show. They show kind of like the 13F info. It's more interactive, and I believe they show their foreign holdings. Like Clifford, tell me, is BYD still in there, right? Which, by the way, I saw a BYD tractor trailer today. Blew my mind. I was like, look at that. They're starting to make their way in here into the trucking industry. You want to know all my 100 shares companies? I will show. It still hasn't come up. Anyway, I will bring you once I pull it up, so you don't have to wait for this, to the Simply Safe dividends. Bring up my portfolio, and then I'll take you guys by the hand right now. Okay, it's ready. Yeah, okay, Clifford, good. So, yeah, it's embarrassing. It's just a matter of time, buddy. Help is on the way, right? Help is on the way. So, what am I doing here? I'm bringing you to answer your question, Mr. Kevin Mendoza. Here we go. So this is I believe this is updated. It should be. So this is linked to my Schwab brokerage, and it'll update. But nope. See, I still got the 10 Celanese shares, so that's not updated. But here we go, by share count. So this is amalgamation, which is just a fancy way of saying a big conglomeration. So we go from one word most people don't know to making up a word that nobody knows. It's a conglomeration, yes. AT&T, this is a combination of our self-directed retirement portfolio and our bridge, the taxable account, and then a Roth. And remember, this isn't all of our holdings. We have a sizable chunk of our net worth over in our 401k, which we don't really share that because it's just mutual funds. Maybe someday, but either way, so there you go. 440 shares of AT&T. Oh, please, Lord in heaven, God, baby Jesus, I hope this goes back up to over $23 a share. Hope is not a strategy. Yes, I understand the cognitive dissonance I have. I don't even know if I use that right. I have, meaning that I think there's better options, but I'm very stubborn, and I am experiencing the sunk cost fallacy hardcore on that. Aries Capital, 405 shares. Realty Income, 159 up to now. SCHD, 151. Main Street Capital, 150. I should have bought more in that when it was in the 38s a couple weeks ago. Toronto Dominion, TD, we got 126 shares. Vici Properties, 115. Nexstar Media, 101. This is my non-dividend stock, Hero Health. We got Hero Incorporated. They changed their name, 101. They had a rough Q3. We could talk about that too, just because it's like knowing what you own. And I'm oddly not concerned with a big 30% drop in one day. I expect it. I have my reasons we can share, but a couple more. PepsiCo, 100 shares, that big one. You know, the one I bought 100 or one share a week. I wish I bought 100 a week. Leggett and Platt. Intel, getting very close. Look at that. My cost per share, 41.65. It's at 40.61, so down 2.5%. And Enterprise Products Partners, we've got 100. J&J is, oh, no, that's updated. Yeah, I got 47. And Altria, I'm going to be selling out of that when I get back to even. I'm not in a hurry with that. We'll just collect the dividends and wait. So there is a bit of our portfolio. I guess if you want to pause and get an updated view, somebody, you can pause the video. I'll just go down a little more. What are you guys doing? Does anybody own Warner Brothers? I'm still looking, thinking of, yeah, of course, down 64% from where the shares were spun off at. Oh, I should have sold there. Should have sold. And I know that's it. Oh, Target. No, so this isn't updated. I'm giving you false information. Sold out of Target. So we are out of Target. And again, I could do the whole stock charts thing if you want to see what I was looking at. And yeah, we got more cash. And then Celanese, we're out of Celanese as well. So I guess this, there you go. A little bit of a portfolio update for you. There we go. Hey, all right. So yeah, it is soon. But, dude, we always say, don't copy us. You need to know what you're buying and why you're buying it. So like with Hero Health, I'm buying into what the CEO, Mark Baum, is saying. They don't pay a dividend. They're a small ophthalmologic, I can't say it, ophthalmologic? Eye care. They're an eye care pharmaceutical company. They got a bunch of new and innovative drugs, ones that are better than stuff out on the market, like one called Iheezo. It's for dry eye disease. It's the first water-free, and it contains the highest amount of cyclosporin, just stuff like that. It's just, that isn't reflected in the business just as of yet because it's had a little bit of a delay in getting out. But, that's why I'm not worried and I'm holding. Same with Nexstar Media when they had that big drop when Disney Charter were going through their dispute. Just so many things that I think are going to be coming down the pike, especially with the political revenue coming from next year's elections. The CW may be profitable earlier than they expected, but I'm still thinking 2025. I think it's a really cool thing, and a lot of people think it's a melting ice cube business, which it could be. I could be wrong, but at least I think I understand the business fairly well. It's well within my circle of competence. Let's see what you've been. Enough about me. What about you guys? Ben D saying AT&T and Verizon plan to sell both. Yeah, interesting. So are you trying to get down? Well, you might be wanting to get down and cut some rug, get up on it. But are you DCAing and decreasing your average cost in hopes that when we do get a pop, when AT&T does cure cancer, we can all get out with a profit? Or they could just keep dropping like a stone. They do seem to have found a floor. Oh, Kevin. Yeah, what made me change my mind with Target? Better opportunity. I think that Johnson and Johnson is better, well positioned for growth, and that's one of the reasons we've talked about why I think you shouldn't sell your when you should sell stocks. You should never sell stocks on price alone. And I realize as soon as I've said that, I kind of did that with Target, but I've been wanting to get out. I started peeling off shares in the low, like 113, 117, but I don't. A wallet invest. PG is Procter and Gamble. Berkshire Hathaway sold out of their Procter and Gamble position, but yeah, I think that. Oh yeah, that's all. Warren saying bye bye Procter and Gamble. They could already be back in it for all we know. We don't know, So we're gonna get this information. What's 3 months from yesterday? That would be, let's see, November, December, January, February. So the second, the second Tuesday in February. Let's say February. February. In February is going to be we'll find out what they're doing right now. It'll be the quarter 4 23 results, and then we can compare it to quarter 3 and see what they did, the moves they made. But that's what I meant by PG, Procter and Gamble. They sold Procter. I don't know, maybe you missed the beginning, but so what do you got, Kevin? One lonely share of Warner Brothers from the T spinoff. Yeah. Why? Are you going to sell it? Do you plan on holding it? What do you think? They got some interesting IP, right? They have Looney Tunes, right? I know they have HBO Max. They have Harry Potter. Or am I thinking of Comcast? I may have my gigantic media conglomerates confused. I don't remember who Warner Brothers owns now. I should. What you got cooking, Chet? Thinking about Verizon and T. Yeah, I don't have your. It could be, So I don't know. What would you guys rather see? Would you rather see the 10-year total return comparison with AT&T and Verizon, or a bit of stock charting with Target? I think you might. You know what? I'm going to do this for you, Chet. How about this? All right, everybody. I'm going to show this to you, Chet. I'm going to bring up Seeking Alpha, everybody. Yeah, it's a Wednesday night here. What are you guys doing? It's kind of late. Not many people are on there. It says unusual. They're not. Oh, I'm sorry. I'm already going away. I'm like, wait, people can't see this. Yeah. All right, here you go. Come on with me, Chet. Let's look on Seeking Alpha. And what were we doing again? Oh, I remember. I'm going to show you guys the total return. This is what you can do if you ever wanted to. So we're going to go to charting. And when the slow computer, jelly. So we do charting. We will do select symbols. We'll leave the S&P up there for fun and gain. Just for fun and grins, we'll add T, and then we'll add TMUS. They're going to start paying a dividend, which Berkshire does own them. For fun and games, let's put S&P at the bottom just because why not? Okay, so we'll update the chart, and then we'll select the metrics. And for performance, we want to see total return because this is just everything that's been distributed by the business. I got to do it again. You son of a gum, you. All right, this one takes a sec. Because we figured out we want to see T. We want to see TMUS. And we'll just throw up SPY. Throw up. I don't know, people want to say VOO, but we use SPY, whatever. All right, so there we go. This is the total return. Right there, you see total return for the last 1 year. And AT&T down 12%. Verizon is pretty much 2.5%, 3%. T-Mobile 1.5%, and the S&P 500 15%. But check this out. When we zoom out 3 years, we have a total return of 30% for the S&P, 14% T-Mobile, negative 12% for AT&T, and negative 30% for Verizon. If that wasn't bad enough, zoom out 5 years. When in doubt, zoom out. Yuck. This is called bucket of yuck right here, Chet. 79% S&P 500, 120% almost total return for T-Mobile, AT&T sitting at a negative 5%, and Verizon negative 22%. Now we go out 10 years, and it is even worse looking because S&P up 192%, T-Mobile 464, AT&T 5%. Dude, if you're at AT&T with all the dividends they've paid out, capital appreciation, after 10 years, you're up 5.4%. That's piss poor. Piss poor. Same thing for Verizon, slightly better at 16%. And then let's see what the max is. I don't know how far they'll go back. 10,955 days for the S&P. These are all the same then, so except for T-Mobile. So look at that. You would have been S&P 500 up 1,581%. Going back to 1993. AT&T, not bad, but 300%. Look at Verizon. I think they were still, I don't know what they're counting there, because does anybody know when Verizon started publicly trading? Because I know they were part of Ameritech, maybe? Either way, just look at AT&T. There you go. Ponder that. 300% total return since 93 in 30 years. S&P almost 1,600%. So yeah, it's tech driven, but there you go. So that's one of the reasons I want to get out with AT&T. It's just a really capital intensive business, and they have to spend a lot of money doing the upgrading the network. Just I used to love it when I'd see the trucks like out driving around, people in the stores. That's overhead. That's capital intensive. And it's really competitive. It's really, really competitive. But yes. So there you go. I hope that helps a little bit about, granted, past performance is not indicative of future results or performance, but when you have a track record like that, it's pretty compelling. And I wish to God I saw that before I started buying AT&T. So, what did you say, Juryman? Oh, what's up, man? Nice to see you. Buy a couple of stocks, which is good permission to keep on the low. Yeah. Do you have any intel on that? Any insight? I'd love to know which moves were Buffett and which were Todd and Ted, especially PG. Dude, he's been in Procter & Gamble forever, and I don't know that they've ever sold out to the best of my knowledge, but I know that they were big on Gillette, and then when that whole merger happened with Procter & Gamble. Let's see. I don't remember what you were thinking about there. So Kevin, are you still gonna buy TMBZ after looking at that big bucket of yuck chart? Yes. Yeah, good. That's a good point, Frank. That's a good point. And let's see how many shares of it he owns of S&P. And I wonder why he doesn't. Why they or he or they? I wonder why they don't just own. See how many shares they're rolling with. There we go. What do I want to do this by? About. I don't know what I'm. Maybe the difference. Anyway, here we go. They're right next to each other. So they own 43,000 shares of VOO and 39,400 of the S&P 500, and everybody just on those, they are receiving $267,890 in annual dividend come from VOO and $256,494 from SPY, the S&P 500. So I don't get why they wouldn't just put that all into VOO. I don't know. Good question. If anybody bumps into Warren or Todd or Ted or Ajit Jain or any of the fellas over there, to ask them. ELEV. That's Elevance Healthcare, right? Yeah. I'll be a Russ. I'll be Russ. I'll be a Russ, Ross, whatever you want to call me. No worries. Just happy to have you here talking with you. Oh, dude, Kevin, nice to see you, man. Thank you for swinging on by the channel. All right, let's take a quick peek because I'm not that familiar with Elevance Healthcare. So we will do this, and I'll share the entire screen. First, how about just see what they get a rating here, and then we'll go to Simply Safe. I like Simply Safe. Kevin likes. Are you sure? Elevation Oncology? Are you? That can't be right. Is that right? No. You probably mean Elevance Healthcare, right? Probably ELV. I hope not. Right away, I'm going to say the pharmaceutical or biotech, anything like that. That's a penny stock. Forget it, man. Unless, I would almost rather say just go to the casino, put that money on red or black on the roulette wheel. I assume you mean Elevance Health. They have this is the analyst, give it a buy. The Wall Street gives it a strong buy, and the quant gives it a strong buy. That's their algorithm, from what I understand. Yeah, so mostly buys. There's a hold there. But let's look at Simply Safe Dividend. It's so nice that it remembers my password for me. ELV. So somebody brought ELV up once before. Hopefully that's not too big for you. Some of us don't see so well anymore. Safety score of 99. We'll kind of blow through this. You can just pause the video if you want to look at these numbers in depth any more. Recession return negative 61%. So we'll see if that lasts. Ooh. Apparently they have no net debt. That is very nice if that's the case. Yeah, 16% 10-year CAGR, 11 years of dividend growth, also uninterrupted. Payment details, looks like they're getting ready for a dividend increase next time around. They go ex-dividend in 19 days. Let's see. Now, yeah, here's one more thing. I know a lot of you guys think it's expensive, $456 a share, but I'm going to bet, I don't even know, I'm going to guess that they probably have a few 100 million shares outstanding. That would be my guess. We'll see. So here's dividend yield is 9% above the 5-year average. PE is below the 5-year. Again, that tells us nothing about the future of the business. And, oh, this is beautiful. Yeah, super low free cash flow payout ratio, and it's usually low. Free cash just going up and to the right, earnings per share up and to the right. Yeah, this is a well-managed company. I really don't know anything about them, so I'm just looking at the numbers. I don't know what their futures are. Yeah, sales growth even. I mean, it's come down to 10%. That's very, very nice. There you go. 239 million shares outstanding. That's why. Look at how much they're earning, and there's that spread around 239 million shares. Now, if they had 2.39 billion shares, yeah, they'd probably be, $40 a share or something. But that's why I always want to tell you, you can't just look at price. You can't. Yeah, so look at that. Shares going down, revenue going up, just stepping up night. Oh, man. This is beautiful. This is like, like porn or something. ROE in the high teens. That means they're plowing the return. They're reinvesting money back into the business and growing it at a higher rate. Yeah, super well-run business. And free cash flow margin, okay, that could be a little bit higher. That just means that this is dividing the free cash by the sales. So 5 cents out of every dollar in sales is making it to free cash. Not terrible. There you go. No net debt. And $8.94 of operating income to cover every $1 of interest expense. So, yeah, man, Elevance Healthcare, 99. I agree. I concur. Simply Safe. So there you go, man. That is. I'm gonna get caught. Yeah, good. I'm glad I guessed right, Tito, because when I saw whatever oncology at 46 cents a share. I'm like, I don't think this is what he was talking about. But yeah, interesting. My alpha spread lapsed. You know what? I'll see if it works for you before maybe I can get you their intrinsic value. I wasn't using it that much anymore. Um, let me log in, see if I can. So I think I get 3 a day that I get to use. So you got to be sparing with it. You guys can all use it too. Let me see if I log in. It's going to tell me. Yeah, okay, I'm going to share this with you. Let me come back and grab you guys. Let me grab you. Right of the screen. There we go. Share this. Share that. And away we go. All right. So there you go. I'm on the free plan now. I let it lapse. I think, Kevin, you still sign up for it, right? You know, it's just, it's, I don't know. It's 162 bucks. I got like a discount, 10%. Oh no, they're gonna block it from me because I'm on the free plan. Yo, oh, I'm at my limit. I'm at 3 of 3. I must have looked at something today. Either way, well, come back to the next live. Come back to the next live stream, or you can go to alphaspread.com. Looks like that, and get their guesstimate on an intrinsic value. Remember, nobody knows what the true intrinsic value of a business is. It's just the best guess. It's a guesstimate. It's an estimate. Guesstimate, estimate. But yeah, solid, man. I'm going to look into that. So I think Elevance looks good. Yeah, like Clifford, VZ&T like investing in investment grade bonds. Could be, except that you're losing principal, though, right? I mean, as of late, the dividends aren't covering the principal you're losing, so that kind of sucks. Yeah, you're welcome, Chet. So nice to see Mr. Burgess in here. You know, it's funny. I was just kind of griping to my wife, saying it's funny that in this world that we're in, this social media universe, that there's people out there like Kevin Burgess that have a ton of experience. You know, people like Ian Lopic. You know, some of these people have forgotten more than I know, and you just, because of the way the game is played, you can get people that have been, and nothing wrong with it. It's what it is. But you get people that are like, hey, I've been dividend investing for 3.5 months, and I'm 22, and I have a net worth of $5. And people are like, sweet, I want to hear what you have to say. But you know, it's the game. It's the game, and hate the player, not the game. No, it said that. Hate the game, not the player. That's a very. All right. Anyway, enough of that. What we were? Oh, dude. I wish I had a. Let me look through my little branding things here. I wish I had a. Oh, I don't have anything for you. These little like this. I gotta load more of these up. I haven't been in a minute. Like Macho Man, you know.
Ooh, yeah, dig it, yeah.
There you go. That's for you, guy, the Macho Man. So, anybody from Canada. So it's funny, on StreamYard, I can upload little video clips and things to play. That's where I play the ending Pee-wee from. I got to get some more of these video clips loaded in. So there you go. Congratulations, man. And yeah, I did. You must have joined a minute late, but I sold out of all my target. I still have exposure in mutual funds, but yeah, we sold out of them. So the financials, Matt, that was simplysafedividends.com. There you go. Thank you. Okay, guy answered it. This is why I love you guys. Thank you for, I can be a little bit slow sometimes. And yeah, again, Elevance, it's just our opinion. We never know what the future holds, but I'm going to look more into Elevance. Like that looks really, really strong. That's what I like. All right, we got the Meisterbrow. Does anyone remember Meisterbrow? That's maybe a little old, but yeah, nice to see you, Ryan. I would invite you on, but by the time you get set up, I don't know, I'll probably be done out of here anyway. Oh no! Did I do it? Why didn't anybody tell me? Hold on. Watch this. I thought I checked it. No, it's coming from my 2i2 unless it's low. How does that sound? Is that that's probably too loud. That's weird. I don't know what I don't know. I'd have to look at what happened. But it says I am on. I don't know. Is this any different? Did that change it? Is it any better? Come on, you guys got to help me out. I'm not a young buck anymore. Say, hey, hey dummy, your audio doesn't sound right. Yeah, see you, Chet. We're just gonna shoot the breeze for a little bit more. If you guys want to look up anything on Simply Safe, let me know. Yeah, again, Guy, dude, that's so cool. 100 shares of Visa. You're almost up to Berkshire, which has 8,297,460 shares of Visa. And that's spitting off $17.3 million of annual dividends at them. Wait. Oh, YMCA. I thought you were going to say like you put it on, like you were forcing people to watch this at the YMCA. I was going to say, dude, that's not cool. Cody, what's up, man? I'll be in Chicago. I'll be down. We're going to check out Macy's on Saturday. We're going to go to, I think we might stick around for the parade. They're doing a parade on Michigan Avenue, Lights Parade. I don't know. Look at this guy buying 30 shares of Elevance. Elevance SPY. Oh, Elevance and SPY. Okay. I believe it, man. Why? Because good. No, it's not my new. Okay, good. God bless it. Come on, guys. Like, tell me because now people aren't. Well, we live and we learn. Awesome. Well, anyway. Yeah. No, I was running around. I showered and I plugged in my my little interface and I didn't. Well, that stinks. Oh well. I guess it's probably not going to sync my channel, but that really stinks. So basically, it was using the microphone. Whatever. Jason, I sold the last remaining Celanese shares because I would rather have that in Johnson & Johnson. And again, little bit high debt. Margins are compressing a little bit on it, but I don't want to. I don't know. I think J&J has a better outlook than them, better performance in the future. That's my guess. But dude, that stinks. I'm so upset about that. And I checked it too, but it said default and it showed my interface on there. So then I clicked a different one. I don't know. Hey, you live and you learn, I guess, that's there you go. Matt's still buying that Petrobras. Dude, you're going to own the business soon. You're going to put you on the board. You're going to be able to do a hostile takeover or what do they call it with Nelson Peltz, right? Nelson Peltz did that with a couple of companies. I think he's trying to do it with Disney, buying up millions and millions of shares and then taking control of the board, putting his own, what do they call that? Activist takeover. You can do an activist takeover. Will, what's up, man? You got here. You missed all the shenanigans and hijinks of the bad sound. You know what it takes. Unfortunately, it's, so for all of those of you watching, if that happens again, right away, say like, dude, your audio sucks. It's terrible. All right, let's see. PBR doing a special dividend in addition to the already planned dividends. Yeah, those special dividends, man. I don't know about them too much. I've never really dug into PBR, so that would be good if you are a holder. T Rowe, solid, good balance sheet from what I remember, but if we do hit that proverbial recession, since they do a lot of wealth management, right, that would mean that people would probably be selling and there would be assets that they manage reducing, so there would be lower fees, so that would probably compress their revenue margins, I would guess. Again, I've never really dug deep into T Rowe. I heard my guys on Dividend Talk go over them a few times. By the way, check out the Dividend Talk podcast if you don't. And yeah, so I think they're solid. I think they're going to be okay. Oh, dude, man, dude, I was in the Navy. I could take it, bro. Put it this way. I was in the Navy. I was a construction worker. I grew up in almost inner city Chicago. Some would argue, if Berwyn, Cicero area. It's not the country club suburbs out there. So yeah, I can take it, man. Put it this way, fun story. Uh, when I was in second grade, it was a different time back then, but I had some Latin Kings. They stole my bike. I was in a card shop and I didn't lock it up, and had some Latin Kings steal my bike. There you go. Welcome. Ah, nice, Charles. You're 31 away from J&J. 31 away from J&J. All right. It was default of the interface for the bad sound. Yeah, so on anyway, I won't get into it, but I can select the different cameras on StreamYard, what I use. And, usually it'll be on what I use, and I just briefly glanced. So, well, so it's not going to do good on replay. You guys stuck through it thick and thin. Like, that's awesome. I love that. So, yeah, it was the default setting, and it plugged me into the microphone on the laptop, which is way far away from me. T-Row go to 80, you could buy. I think they'll be okay for the long run. Yeah. Dude, a good price for a furnace AC replay. I have no idea. God in heaven, please watch over my furnace, because it's the one that came with our house when we moved in here in 2005. Running like a champ. I do have a friend that owns his own HVAC business, but yeah, I'm more of like in commercial and industrial loading dock equipment. So I really don't know. Maybe you can ask ChatGPT or something. Yeah, honestly, I don't know, dude. Sounds about right, I guess. Don't buy cheap, because then you'll buy twice. I've learned that. EC Ecopetrol. I have never even heard of that. So the answer is no. You like the Hershey growth and just bought Abbott Labs. Abbott Labs looking solid. Oh, by the way, I finished my Ryan ruined it. I finished the railroad. I looked at 5 railroad stocks. I kind of redid the spreadsheet a little bit, so I'll probably record that tomorrow night. Wanted to do this, just get this out tonight and just show you guys what was up. But yeah, look for that either Friday morning or Saturday morning, depending when I get home. But you live and you learn. Hershey, looking good. I was thinking about taking a position in the low 180s, but again, I have mutual fund exposure, and I think they're in SCHD, right? No, I don't remember. Are they? Before we jump out of here, let me see. Let me look at that, and let me see what is in SCHD holdings, and then I'll bring you guys. That kills me about the sound. That's the thing that they say, is that in the world of YouTube, here we go. I'm going to bring you guys here. In the world of YouTube, sorry, closing windows, present. Yeah. So in the world of YouTube, people will forgive audio or video that isn't that great, but like they say, the biggest sin is bad audio. So that just kills me. But what are you going to do? What are you going to do? All right, here we go. These are the current SCHD holdings weighted by, the percent of assets. So I don't remember now. We got Broadcom, Amgen, Pepsi, Coke. Interesting. So Broadcom's at the tippy top right now. What do we got? Texas Instruments, Chevron, Pfizer, BlackRock, UPS. I swore I thought Hershey was in here. Valero, Ford, Kimberly-Clark. Riveting, isn't it? T. Rowe Price. So there you go. I do have exposure to T. Rowe. Darden, fifth. No, I guess not. Snap-on. That's one I should have kept building in the 220s, 30s, 40s. Kellanova, Watsco. No, I guess not. Williams-Sonoma, Robert Half, Unum Group. No, I guess I was wrong. They Advanced Auto Parts. Yuck. Leggett and Platt troubles. No, sorry. We're almost done. If you're watching and your eyes are going goofy, Conan Steers, Northwest Bank. No, they ain't going to be. They would have been higher. Buckle, that's one that popped up on a screener I ran recently. Buckle's solid. That should be bigger. Also, guess. Nope. Ethan Allen, Ennis, and then what do we got at the end here? US dollar. Nope, nope, nope. So the answer, everybody, is no. But oh well. I'm sure they're in something else I got. I have large cap funds. And did I ever go over Ronald Reed? Dude, of course I went over Ronald Reed. I did a whole newsletter about Ronald Reed. Yeah, he was the $8 million janitor. Talk about the stocks he owned. Yeah, he owned just the blue chips, man. Just Procter and Gamble, J&J, just all those blue chips, just kept reinvesting the dividends. Of course, I don't agree that people thought he was so poor that he needed help. People thought he was like on the verge of living on the streets. He was so cheap that his winter coats, people said he wouldn't buy a new one when the buttons would break. He didn't know how to sew. So he was holding his winter coats together with safety pins. I mean, dude had a net worth of $8 million and he's going to get a free lunch at like the soup kitchen down the street. And he's wearing winter coats held together with safety pins. It's just, let's see, a couple more here. Am I thinking of selling out of any of the positions? No. So Celanese is gone. Target we exited today. Yeah, I'd love to with AT&T, but I share it with you guys. I'm really stubborn with AT&T, and the Warner Brothers shares. I'm gonna eventually. I don't know. Maybe if they collect up to around 20. So I think that's mostly it. Oh, Altria. That's just a personal one. Just my wife and I were talking it over, and we own, or we know multiple people, each of us, that have passed away from lung cancer, and we've seen people battle emphysema that were lifelong smokers. It's just, I think that their product harms somebody directly and knowingly in the value chain. And I know the whole, thank you for smoking and all that video, but that's just our personal decision. We're going to exit, and we're just not buying any more. So we're going to wait until we get back to our cost basis and then sell out of Altria and put it into something else that, like something else that's similar yield, probably Ares Capital, just because they're at least making loans that are helping people, helping small businesses try to grow. But anyway, or middle market businesses, so that's some of them. Hey, Deadeye, dude, I don't think I've seen you around before. And I think that's the mask from Monty Python, right? I love it. Hurts SCHD's yield down for the year. Yeah, it is and it's not. Actually, my cost basis is like 73 and change, I think. So I'm not too worried about it. They're going to keep growing because remember, that dividend yield is going to keep on increasing for SCHD the way it's constructed. So yeah, real quick, any of you guys, do you know your SCHD yield on cost? Because I know that there's some people with a yield on cost of, I think, 6% on SCHD, and you haven't held it that long. So yeah, 72. Okay. Yeah, I know people, and that's one of the safeguards with dividend stocks is that when they start going down, the yield starts going up. So you can call that an accidental high yield, right? And if a company is good, and remember, business performance isn't always reflected in the stock price. I mean, over the long term it is, but in the short term, you get those market gyrations, even a year or 2 years, it may not be reflected. So the lower the stock price goes, the higher the dividend yield is going to be. And it's just going to make it look that much more attractive to income investors to go after. So Yeah, no, we're not gonna do that. And I know, like, yes, I understand. Like, if you, by Walmart, they're probably one of the biggest sellers of tobacco products. So technically, you could say they're hurting it, but it's not like the bread and butter of their business. So, yeah, yeah, it's just our personal choice. We don't fault. It's legal. Don't fault anybody for it, and it's just like you do you, and it's the whole personal and personal finance type thing. So, well, I'm gonna I'm gonna go. I won't say crying my beer because I don't consume alcohol during the week anymore. Just my Friday, yeah, right. Only days that end in Y. Now, just Friday, Saturday, Sunday. That's it. So, uh, I'm gonna go cry in my fizzy water about the bad sound, and you know, just say something next time, dudes. I love it. What are you gonna do? Hey, anyway, so get on with the rest of your nights and your bad selves. And yeah, thanks for tuning in on this kind of impromptu live stream. And Mr. Paul Rubens, baby, take us out.